Hi, I'm Rick Kaler, and thanks for joining me. Well, how much value does a fiduciary financial planner add to your investment portfolio each year? The answer is 4%, according to Russell Investments' 2017 update to the firm's annual Value of an Advisor analysis. If you do the math quickly, that seems like a pretty incredible deal. Since most financial planners charge a starting fee of around 1%, earning an extra 4% for that expenditure should be a no-brainer. Why then aren't people lined up outside the doors of financial planners waiting to get a chance to become clients? Let's take a closer look. First, this analysis was done by an investment advisory firm. So I'm guessing they were unlikely to fund an analysis that found investment advisors to be a terrible waste of money. That said, everything in their report is true. It valued 5 investment functions: rebalancing, behavioral mistakes, investment management, financial planning, and tax planning. Let's take a look at each one of them. First, rebalancing. The study found that annual rebalancing, which is bringing your portfolio back in line with its target asset allocation, adds about 0.2%. Now, while that's seemingly a small number, it's something that can add up to a lot of money over a period of time. The second, behavioral mistakes. The analysis concluded that an average investor's behavior of trying to time markets and chase returns costs them a staggering 2% a year. The study found that if an advisor can motivate an investor to not try to beat the market, but to stay in an index fund come hell or high water, this will add 2% to their annual return. Now, this is really significant, but there's a huge caveat that wasn't mentioned in the article. To add the 2% annual return, the advisor must believe in following a passive index allocation and not time the markets themselves. Number 3, investment management. This is just investment-only management that includes no financial planning, no ongoing service, or investment guidance. Just an annual statement, online access, and a phone number to call, which is basically what a robo-advisor offers, and this is worth about 0.33% or 33 basis points. Number 4, Russell analyzed the value of financial planning based on the cost data that they got from the Financial Planning Association. They defined financial planning services as those over and above investment management, which would include investment advice, customized financial planning with annual updates, Social Security, and say retirement income planning, and the custom requests that come with financial planning. They concluded the value of financial planning was 0.75% or 75 basis points. Lastly was tax planning. The analysis concluded that a non-tax managed U.S. equity mutual fund costs the average investor 1.53% annually in reduced return because of taxes, which is significant, while a tax-managed fund cost about half that, 0.73% annually. They concluded the value of tax-aware planning and investing was 0.8% or 80 basis points. Now, if you add all that up, the study concluded the value of an advisor was 4.08% a year. Now, the study didn't mention some of the advisor services that you could do for yourself if you choose. For example, if you're willing to do your own annual rebalancing, invest in a passively managed portfolio of sensibly selected tax-managed index funds, and never sell out during market drops, you could add 3% of annual value yourself. Granted, most people don't want to do that, but it's not that difficult. That leaves investment management and financial planning being worth 1.08%. This is just a bit higher than what the average fee-only planner charges, but it's considerably lower than what most people pay in commissions to an insurance company or brokerage firm. So here's the bottom line. If your financial planner is a fiduciary, charges a fee of around 1%, doesn't try to time the markets, uses index and tax-managed mutual funds, rebalances your portfolio annually, and encourages you to stay in the market during a crash when you're desperately wanting to bail out, you're probably getting a great value. Thanks for listening.